As we go into the back end of the year, records still come on the S&P 500, the Dow and the Nasdaq. Europe is following on, but, well, it's a poor relation. But let's concentrate on where we are now with the S&P with Brian Noble from TraderNoble.com. You've joined us over the year, and you've been witnessing this rise and rise and rise again in the S&P 500. Going into 2018, how confident do you feel about this gain that we've seen in the market?
Yeah, I don't think it's sustainable from here. I mean, I've been on your show, as you say, most of the year. We've been bullish of the market for most of the year. It's interesting looking at the chart for the number of shorts that the IG clients have now. It's fallen down to 64% from 85% when I was here in October, and we got another 200-point rally. So finally, I think the people who have been short have been squeezed so much. My target level, always in this S&P, was 2680 to 2700, which we're currently in at the minute. The third standard deviation is 2792. It seemed miles away when we were here in October at 2400 that we're going to get that high, but we're only 100 points shy of it this morning. So yeah, it's an incredible bull run. But in my view, if you compare the S&P or the Dow to the Nikkei back in 1989, that interestingly stopped on the 31st of December 1989 when we went from 28,000 to 39,000 in a 10-month period. To get between the third and fourth standard deviation, and then just to give you an idea of what can happen when you do get a crash, 8 months later it was at 23,000. So
yeah, this chart here is the March contract. What do you need to see to start seeing successful shorts on this market?
Well, basically we need a sell extreme. As you can see on the chart there, we're up at the top of the daily Bollinger Band. It's something that I watch quite closely. If I'm going to go short or try and go short that market, I want to see us at the top of the band. As you can see from your chart, most of the times we have hit the top of the band. We've had a small sell-off, but you have to be quick. If you're not quick taking back your shorts, you're going to get killed. If we go back to last Thursday, the reaction low was 2651.75, all based on the US Senate rumours, and Rubio was leaving and the market got hit. Then he was coming back in again when he got bought allegedly, and lo and behold we get past overnight. S&P didn't make so far has not made the high that it made on Monday when we got up to just shy of 26.98. We're currently trading at 26.92. Today I'm a seller between 26.97 to 27.03 with a 27.08 stop in small size. If I get taken short and get stopped out at 27.08, I'll be a very aggressive short in front of 27.30 with a 27.20 with a 27.30 stop. But going back to your original question, first support I need to see broken is 26.51 and 75, which is last Thursday. And then we go back to the 1st of December on the back of the Flynn news with the FBI investigation. The S&P got hammered that day, went down to a low of 26.05 and closed at 40. So they're the two levels initially that we're watching. Obviously the 100-day moving average is miles below here at 25.60, and then the 200-day is way down at 24.94. So it's not going to be a straight line. It's going to be back and forth. Plus, unfortunately, trying to go short in December, as you know, is not a good time. But it will be interesting to see if this market does top on the last trading day of the year to replicate Japan.
Yeah, I said Europe has been a poor relation to what we've seen in the States. We haven't seen nearly as many records in Europe as we've seen in the US. Taking a look at the German cash index and where we are at the moment, we're looking as though we want to try and get up to the record highs that we've seen, which we saw intraday, what was it, 7th of November, we saw a high at around about 13,530 odd. What are your calls at the moment on the German markets?
Yeah, well, the German market had big resistance at 13,200. We briefly broke it the last couple of days, got up to a high of kind of 13,350, but with the bund yields beginning to finally rise, we've seen a sell-off in the DAX yesterday and this morning, got down to a low of 12,140, which coincidentally was my buy level today, and we've had a small bounce back as we wait for the US markets to open this afternoon. But the DAX can't hold this 13,200. I think the bears will be back in control again. I would have thought when we got up to the highs at 350 over the last couple of days that we will go and challenge these 530 highs from November, but so far no. But if we close again and back above 13,200, yes, I think we'll go back and test 350, and we could well go up to the all-time highs in this Santa rally. But a break and close below, if we close below the lows made this morning at that 13,140, then I think we could be back down to the 13,000 level very quickly.
Yeah, okay, all right. Let's taking a look at two of the major equity indices. Let's take a look at precious metals. You've been following the price of gold and silver this year. and you've had a position to actually be your long.
I'm long silver. Yeah, silver is interesting. You know, silver made a high of $51 back in May 11. It's a lot safer trade than trying to trade gold because of the points on gold and the volatility in gold. Interestingly, the last 3 Decembers, both gold and silver have bottomed. Last week, the low of silver was 15.48. The low of gold was 12.36. We've had a nice bounce off both so far. Silver has a nice trend line of 15.80 to 15.90. If we can close above that by Friday evening, I think that would be bullish going into the first quarter. You know, if we replicate what's happened the last 3 years, silver's had a nice 15 to 20% bounce in the first quarter. If the equities come under pressure, I think gold and silver should be fine. But you know, if we go back to the gold market, we've had a nice bounce to set off that 36 level, but we really need to break this 1260, 1270, which is big resistance. We're right in the middle of it today. I think a close above 1270 on Friday will be bullish going into the new year.
Yeah. Okay, look, Brian, thanks so much indeed for joining us. Brian Noble is from tradernoble.com. You can get more from him on his website. Subscribe to IG for educational content, company insight, financial analysis and expert commentary. Or visit our website for daily market updates, trading ideas and strategies.